How you doing? Rick Bowman, and we're back with video number 4 in how to buy a car with bad credit. And in this one, we're going to actually start the process, believe it or not. Now, on this video, you're going to need to be on our website because we've got some free resource links that are out there that are going to help you instead of you trying to navigate the entire internet and figure out who's good, who's bad. But our website is www.howtobuyacarwithrickbowman.com. And in this one, what we're going to do is we're going to start the process of applying for auto loans. One of the biggest problems that people that have bad credit, or what I term subprime finance customers, have when they walk into the dealership is they feel about 2 feet tall. And that's mainly because of the way the dealership treats them. And it's kind of like, oh my God, not another mutt, not another roach. Okay, I mean, there's a million nicknames in the business for people that have bad credit. And that's unfortunate because they really don't deserve that. But a lot of them will come in very, very ill prepared. Okay, and again, like I said before, with the attitudes, of, well, somebody needs to do something for me, and we're here to buy a car, and we're serious. Well, you haven't done your homework, and you haven't done those things. So the first thing is a dealership, when somebody does come in with the right attitude and doesn't know what their credit score is, can be taken advantage of by a dealership. Because they'll just come out, and God, we used to do it all the time, where we'd walk out and just put somebody in their place by going, hey, I pulled your credit report here. Just do me a favor. Let's take a look at a couple of things before I talk to the bank. You were late on this. You were late on this. You didn't pay this. You had a repo here. Can you tell me what that's all about? Okay. And what it would do is it would humble out the customer real quick. And at that point, the dealership could charge pretty much any interest rate or any kind of price that they wanted to, just by making the customer feel like a piece of crap. So what we're going to do is we're going to eliminate that. We're going to put you on a level playing field. When you walk into a dealership and you're pre-approved for a loan, you're a serious buyer, number one. Okay, that's the first thing that it does, is it lets the dealership know that you're there to do business and that somebody out there thinks you're credit worthy enough to get a car loan. The second thing it does is that when you get a pre-approval like that, the dealership, dealerships are goofy. Okay, they think weird. They're control freaks. Okay, they've got to control everything about the sales process, and that's kind of what I'm going to teach you in the next few videos, is for how you can go ahead and take control of that situation. So let's say in this example you're pre-approved, and you walk in. In order for the dealership to really feel like they're in control of it, they want to control that entire sales process, A to Z. In other words, they don't want you using your bank, okay, to finance it. They want to control the financing. They want it in-house. They want to control when they get funded. Well, in order to do that, they would have to actually beat your interest rate, wouldn't they? Okay, and the terms of your pre-approval in order to do that. So it makes the dealership work a little bit harder. Now, I'm not saying that we're going to use these pre-approvals, okay? I'm also not saying we're not going to use them. Okay, we may end up with a terrific approval, and some of the resources that I've got out there for these networks have some very, very strong ties to the finance world and getting people approved on car loans. Now, the first thing I want to say is and you cannot lie. My God, you cannot lie on these applications. You will be caught. Okay, so just be honest. Okay, you may even get a phone interview, from some of them before they approve it. And here's what the banks are really looking for. They're looking for honesty. Honest people pay their bills. They realize that people, have tough times and that things happen, and they're okay with that. But what they really want to know, are you going to pay? Are you stable? How long have you been on your job? Do you have friends in the area? Okay, so let's start with a couple of things that you're going to need. Number one, these are things that you're going to have in hand, okay, in the event that the bank calls you. So you might as well get them together now. First of all, you're going to have a recent paycheck stub. If you're married or if you have a significant other, you're going to need that one if they're going on the car loan with you. The second thing you're going to need is proof of residence. Now, proof of residence can be a number of things. Usually what the bank likes is a telephone bill, a utility bill, something that's official that comes in the mail, okay, that shows your address on it, okay? It doesn't matter whether you rent or own, okay? Somewhere along the line, you've got a cable bill or a water bill or a phone bill or something that shows your address. The third thing that they're going to like is 5 references, okay? And when I say references, it could be friends or family. It doesn't matter. But they're going to need names, addresses, and phone numbers of 5 people that you know and that you have known for a while, okay? Those things all need to be there with you, okay? When you're putting down your income, and this is something that's really important, and I'm probably going to split this up into 2 videos. When you're putting down your income, one of the reasons why most people get turned down for a loan is for not enough income, because they make a very common mistake, and most finance managers out there and finance directors and sales managers never ever bother to catch this. You know what the big mistake is? They turn around and they put down their net income. Okay, net. Net means how much you take home each week, what the check is made out for, what the direct deposit is from your job. They put down their net. Okay, well, guess what? Banks base their lending criteria off of gross income, not net. So let's say that you make $10 an hour at $40 or 40 hours a week, okay, which would be $400, which would be almost $2,000 a month. Now here's how I'm arriving at that. If you're getting paid weekly, your income is your dollar per hour times 40, which would be for a full week, times 4.3 if you're paid weekly. That is your gross income for the month. That's how it's figured, okay? So you need to make sure that A, you're putting down your gross. So if you're making $10 an hour times 40 times 4.3 would be a little less than $2,000. I want to say it comes out to be $1,966 a month. That's essential, okay, that you put down gross income on there. If you've lived at your residence for 6 months, that's a good thing. Put down 6 months. What they're looking for is a track record. You need to have the address of the place that you lived previous to that. Here's what most banks are looking for. They're looking for 12 months on the job, okay? Sometimes some banks you can get away with 6 months on the job. It doesn't really matter if your employment is what they call like employment, meaning that you were a waitress at this place and now you're a waitress at another place. When you're putting down, if you are, say, like on tip income, you need to put that down under other income, okay, and call it tips, all right, because they're going to average it, okay, and most of them have what they call a tip chart, okay, so they can figure out what the average tip thing is. But this is the start, and again, I stress, do not lie. Now, these resources are free, and what we're going to do is I want you to go in and I want you to apply. Underneath this video, you have to be on our website for it. There's 2 links to 2 different lending networks that are out there, and I want you to fill out those 2 first, okay, and submit them. They're free. You're going to probably get a call back or an answer of whether somebody can help you, okay, on those, and then we're going to fill out 2 more after the next video. Now, you may be asking, why? Why are we doing 4? Why don't I just apply to 1? Because each one of these lending networks deals with different lenders. And because I can't see your credit and know exactly what bank we should go to, these lending networks are going to do the work for us. Okay? So the first thing you need to do is, after we get off this video, you're going to see 2 links underneath video number 4. And what you want to do is go in and fill them out. I mean, they're like 2-minute applications. They're no big deal. And they will send it out to their lending networks. And we will see you in the next video, and we'll discuss how you're doing on that so far. We'll catch you in the next video, and we'll talk about the next 2 lenders. Thanks for listening.